And that means we are now live here on our YouTube channel. It's our daily show we call the Halftime Report, where we go through these markets one step at a time, looking at the charts, breaking down the news, giving you guys some analysis out there so you can better run your daily routine. And welcome back to our channel and to our show here on a Thursday, the second day of September. Markets are starting out the month, continuing the trend to the upside, obviously. Very healthy, very bullish. We had weekly unemployment claims come in today, maybe a little bit of a precursor to tomorrow's jobs report, which is what the market's been waiting on all week. We're going to talk a little bit about these conditions as we break things down one step at a time. Coach Matt has a couple of companies that we're going to look at their earnings reports on, specifically Chewy, one that grabbed my attention. I know there's a few others as well. Tyler, Greg, Matt, myself, we're all here. Let's get into it. Tyler, you first. How you doing today, sir?
Listen, not as good as small caps, Tim, but I'm doing pretty good.
Small caps. Are you going to spike the football right now? Is that
he might as well start spiking that football. Russell 2000 is starting to play a little catch up.
Yeah.
Listen, Matt and I laid out the rest of the year yesterday. Okay,
go watch the tape. We know what's going to happen.
Yeah,
yes.
And I'm excited in mid-October when we start that rest of the year based on the tape and the timeline that we had.
Running has already began with Bear Stop Out Day a week ago.
Is it already happening? Well, we did have a Bear Stop Out Day.
High base breakout. Yeah, look at the high base breakout right now.
Greg?
I like it.
Greg, are you as excited about the small cap breakout as Tyler is?
You know what I'm excited about is when it hits that 2350 and turns back down again, because that's what it does. Because that's what it does.
When it hits resistance stalls, and
then
you get the spike.
And I've been saying it for since February.
Greg, go review the halftime report from yesterday. We agree with you.
Gosh, I cannot freaking wait for this stupid thing to break out. I cannot wait for this stupid thing to break out.
I was gonna say, you say we, but not Tyler. Tyler disagrees with me, but that's okay.
I'm with him.
It's been an ongoing battle back and forth here for the better part of 7-8 months. Greg has been right. Whenever it does hit resistance, it has stalled, but I feel like there's something else cooking here. I do like the analysis based on that 200 period moving average. Greg, go watch the tape and then you can fight with these guys a little bit more.
I don't need to watch the tape. I've got this nailed. I'm good. You know what I mean?
It's dialed in. By the way, if you're out there watching the show as we get started, welcome out. Hashtag Team Tackle right in the chat. It gets the conversation going in the right way each and every day. If you're brand new to the channel, make sure you click subscribe, click the bell. We break down markets every day that the markets are live. We go live 12:30 Eastern. Let's get down to business here. Tyler, what are you seeing in the charts on the S&P broad markets first?
Hey, another halftime report and another day where the S&P is up basically 0.25% to 1/3%. I mentioned this on the Traders Lounge this morning. It's Groundhog's Day, okay? Wake me up when we don't have a day where we're between up 0.25% to 0, unch on the day. I like it, dude. I love that this is just grinding higher. There's just nothing out there that the market is worried about, or at least the traders are worried about right now. So until that changes and you get something to spook this, I don't think you second guess it. Just play the trend.
You know, Matt, the economic data point that came in this morning was weekly unemployment claims. Obviously, the conversation is going to happen tomorrow around the monthly report. The Fed has been waiting for it. Everybody's kind of speculating on it, anticipating it. I'm with Tyler. Right now, the markets are just kind of chugging along, moving forward. Do you have any anticipation about this report tomorrow? Do you think that it provides market risk? Are you worried about it? Just eager to see what happens? Like,
I think I'm right there with a lot of market participants in the sense that eagerly anticipating the release of the jobs data tomorrow, given the fact that the central bank has told us the importance of this jobs report. If it passes the sniff test, and that's what it is tomorrow, you're most likely going to see tapering announced. In the face of the Delta variant, you're most likely going to see tapering announced coming into September, and the most likely occurrence with a good jobs data print tomorrow is tapering begins in October. And so I do think this is one of the last data points in the conversation that will put the final nail in that conversation on when tapering is going to start. A miss tomorrow, I think we're back into is the Fed going to wait? Is the Delta variant going to play an impact? And I think we're back into that wait and see for the next week or two as we start to see a little bit more of the inflationary data.
Yeah. And
most likely though, Tim, most likely you get a print that does justify the tapering. But again, you do have a little bit of mixed data going into that report tomorrow. ADP numbers yesterday were not supporting of the labor market. Initial claims today was. So you got some mixed data going into the report tomorrow.
Little bit of mixed stuff coming into the week, no question about it. I know the markets have been focused on it, paying attention to it. So when we get that data tomorrow, that will be the headline of the story. Right now, we're chugging into that event, and then a 3-day weekend, by the way. So it'll be an interesting Friday session tomorrow. Greg, how are you reading these market conditions right now, and how are you approaching them?
Yeah, if I were the town crier, I'd be walking through the streets going, nothing to see here, nothing to see here. It's just repeat, rinse and repeat. And I think Tyler said that best. There's really nothing to do here until we see some kind of change. Jobs number obviously is always important. I think the market has been waiting for that for the last 2 days anyway. Yeah, there's really nothing to see here until I talked about this the other day. I think it was in Traders Lounge. You know, when you have these things drifting high like this, there's really not much to do until it starts showing you breaking some very near term support levels, or you know, you lose momentum. You know, you've got to see some things before you're gonna react, right? And right now, it's giving you no reason whatsoever to react. Just ride the wave.
Ride the wave, follow the trend. The trend is your friend. A lot of old market cliches that could apply here.
Yeah, and I certainly do agree with Greg's point. You just ride the trend, right? Ride the wave until the wave stops. And as of right now, there's nothing we're seeing on those daily charts from a technical perspective that suggests that this wave is stopping. Especially when you look at the intraday data, you know, over the course of the last few days, yeah, it's doji to a certain extent. But you're really shoring up that that neutrality from an intraday perspective. Look at the S&P 500 from an intraday perspective. You see a very tight range neutrality with a pretty clean trigger for a continuation right above that 45-42 level. So you got to like that tight range neutrality as the market looks to break out. You know, and with a positive print tomorrow, I do think you're looking at a market breakout. When you look at the NASDAQ, you're seeing a very similar type of short-term, and again, short-term meaning intraday data. See a nice little tight range towards the top where you got a pretty decent trigger above 15,700 for a continuation there. And then when you look at the Dow Jones, a little bit more longer-term neutrality. But again, you're looking at that 35,500 level, and it's pretty legitimate resistance right there. So a breakout of 35,500, that looks like a pretty legitimate continuation trigger above that level as well. And so this short-term consolidation, yeah, it's doji, but you got to like the consistency of the intraday data as the market comes into a potential breakout.
Yeah, and it is looking good here on the Dow, and obviously it does highlight a little bit of the cyclical areas of the market. There's some interesting chart action happening in energy, in my opinion, as well as the industrial sector like you're talking about. Can you take a peek at that energy sector for me real quick, Tyler? Because as I'm looking across the market, it is one thing that did grab my attention. Matt, we're firing back up towards this potential breakout. I know that we've got some noise right here. I've been watching this. I have my energy holdings, been cash flowing on them the whole time, like you do with energy stocks most often. Are you excited about this breakout like I am? I'm looking to add exposure.
I absolutely I am. I like the bounce back over the last 24 hours in the energy space, and I'm seeing the technical analysis in the energy space as we've been fighting this 200-day moving average. I actually see it as getting a little bit more consistent. When you fired off that, you know, the break, and you came into that 45 handle a week and a half ago, when you fired off that, it came right back into that resistance. I thought that was the first step in the recovery here. And then when you retested that resistance level right there around $50, it held. Flag-based pattern comes down into the 200-day moving average. It holds. Now you're looking at that as an increasing support bounce off the 200-day moving average as you break up against the 50-day moving average. And as these technicals have started to shorten up a little bit, what's that 50-day moving average done? It's been creeping down right into that breakout range, right there in that $50 range as well. And so, yeah, I do think the technicals are supporting price appreciation above $50. You're so tight against that at 49.21. You got a lot of value opportunity. I do think it pays to wait till after the labor market numbers tomorrow. I don't think you should be front running this type of energy bounce, given the fact that $50 has held so many times in the past, given the fact that the energy space has underperformed the market. I don't feel like front running is the behavior I'd like to see there. But you do got to like the technicals going into the labor market numbers tomorrow And if you do, and again, this is if A then B type scenarios, but if
Mhm.
you do get a positive response to the market tomorrow, the market breaks out of its short-term ranges, energy breaks out of that $50 level, coupled with the 50-day moving average, I do think you got to at least get interested in that. Yes.
Tyler, you on board as well?
Already on board, dude. I love energy here. I love the higher pivot low yesterday. And we'll talk about this later, but oil
Mhm.
getting it done today too. Part of the reason why small caps are waking up, right?
That's a head and shoulders reversal pattern in the short term on oil itself.
Mhm.
Yeah. Well, and you said bear stop out probably more this year than you've ever said in your freaking life, Matt.
I have.
Yet another bear stop out.
It's
in
one of
crude
my
oil.
favorite reversal formations is bear stop out day.
Yep.
Is this a bear stop out day?
I think so.
It is.
I
Yeah.
think so, yeah.
Well, if you're a bear, think about it again. Bear stop out day is technically right,
Mhm.
and I do think you're technically here. But again, as I describe bear stop out day, it's destroying the mentality of the bears. What bear in oil today is looking to short oil? Or is every bearish trader in oil simply complaining today?
They're getting out. They're
They're
getting stopped
simply
out.
complaining today.
Yes. Mhm.
Yes, that's bear stop out day. It's not just the technical trigger where it's like you don't see anything any longer. It's literally the destruction of the bearish hope of making any money, and that's what you're seeing here.
Yeah. Yeah.
You
If
want
were
to destroy the bear that they don't dare touch the instrument.
I don't think you want to be
Hot.
short oil right now. It does not look a pattern I would short for sure. So
Yeah.
it seems like that
Yeah,
sentiment would be shifting.
and also it's not something I'm looking at saying, hey, listen, let's gobble up oil right now either. Oil's still in the range between 65 and 75. We've seen this song and dance before. You do like it, and you do like it going back up into the 74 to 75 range at this point over time. But I still think I still think the play is positioned in energy.
I do too, which is why I brought up energy, and I'm glad you guys kind of concur, and I'm glad to hear the analysis on that. Definitely. All right, and while we're thinking through these sectors, talking about the big picture, Tyler, just flash me through any index or sector that you want to highlight from a technical perspective. Then we'll get into commodities and round them up as well. Run me around the different groupings if you can, Ty.
Yeah, so I mean, we already mentioned small caps, but if you look at the sector leadership today, XLE up 3%. I mean, that's obviously the massive standout, which is why you brought it up. Industrials up 1%. Dude, all I want to talk about is small caps for the next 5 minutes, but I won't. Matt, like the bear stop out day on 8/27. You're probably hoping you get this type of follow through in crude oil. Like that would be the ideal scenario.
Yeah, I certainly agree with that. You're looking for that next high base to trigger above, but again, I think this is very consistent with the type of mentality you want to see after bear stop out day.
Yep.
You want to see the market solidify the technicals above those previous levels of resistance. Well, what did the small caps do here? It broke out with momentum. It broke out with a no sell day, and then you solidified the high base here, and then you followed with a continuation trigger above that high base. I think that's pure technically, and that's why I think you got to start looking at small caps again. I know it hasn't broken out, and I agree with Greg that we're not going to see any type of great price appreciation in small caps until the entire index breaks out and you get that institutional money following with the hedge fund money, following with all the consumer money, and that's when you see that type of true price appreciation, and that's not going to occur until you break out of this longer term range. And so I certainly agree with Greg on that. But my argument over the last week and a half, 2 weeks, is you gotta like the data and the evidence building for the potential of that to occur. And what we're seeing here from the chart following bear stop out day, but it really is even before bear stop out day, the powerful bounce when it broke the 200-day moving average, but stuck the dime at 2100, and then it showed momentum coming into bear stop out day. Bear stop out day threw that market up. You formed a high base, and now what you're looking at is a very similar short-term technical pattern to what you're seeing in the broad market, And that is different in the Russell 2000 than what we've seen in recent history over the last 6 to 7 months. And you're not only seeing a very consistent technical scenario play out on a daily perspective, but when those buyers come in, they typically come in with a little bit more gusto in the small caps right now. And you're seeing that evidence over the last 2 days as you saw the Russell break out of the short-term ranges yesterday, following with some good continuation price action today. Whereas when you're looking at the S&P and the Dow Jones and the NASDAQ right now, they're still slightly underneath their intraday breakout levels. And so I do think a little spotlight in the small and the mid caps is not required right now, certainly, but I'm certainly interested in it.
Listen, Tim, is there anything more exciting for you to participate in than me lobbing softballs at Matt and him just
No, he loves
knocking him out of the friggin' park?
I love softball. Nice. No, dude, throw those fat pitches down the middle. And there's nothing wrong with that. I love hearing it. So, and by the way, you got your 5 minutes on your small caps, Ty. So you got
that's all he needed. He knew. He's like, let me throw it to Matt.
He wanted the chart
knows.
up.
Yeah. Tyler's like, everybody knows you just have to ask Matt one question. He'll go 5 minutes.
You got your chart here, Tyler. It is looking good, and obviously improvement here. It's very good conditions that are moving their way back up, and it's kind of a precursor to what may be happening in oil right now. I like the analysis there, guys. All right, let's flash around the rest of the market if we can, Tyler. Let's look at all the commodities. We've taken a peek at crude oil. If there's anything there you do want to highlight, go ahead. But I think, I think we've hit it right. Good. Improving chart, obviously. And by the way, this is a reflection of an improving demand outlook this week from OPEC, from the IEA. We're starting to see a little bit of that. That could be a good sign for the global economy, by the way, if we can pick up and go test those new highs again. Let's move into gold and then Bitcoin. GC kind of just hanging around this same little consolidation we've been in for a bit. Tyler, what's in that chart that grabs your attention?
Nothing. Look at here's a little lesson on MAs. 20 MA flat, 50 MA flat, 200 MA flat. Let me read you a storybook. I don't know, like the flat MAs, there's just not a lot going on. The biggest victory here was the rapid snapback from this disgusting liquidation. It's almost like it corrected. It fell, okay, slipped on a banana peel, hoped nobody was looking, got its foot back under it, or its feeding back under it, and it's back to just snoozing at 1800. Nothing to see until it takes that 1840, like Matt said yesterday.
Back up in the box, absolutely. Greg, I know that gold and commodities are an important area for you to focus on. I don't want to miss giving you a chance to throw in your 2 cents on either crude or oil or gold here. What's your read on the commodity market?
Yeah, so crude oil is great. I've had some energy plays that I've been in for a little bit now, and to see them start to rally, it's been great. Getting some theta and some delta to go with it, so that's been fantastic. Gold, yeah, it's kind of like the market's nothing to see here. Tyler makes a great point about the moving averages. Until it shows us something, there's not much to do. But again, I like this sideways chop because I use this as a cash flowing instrument. So, not only can you hold it, but you can cash flow it as well. So I'm not mad at it. Let's put it that way. But there is really nothing to get excited about at this point, as far as I'm concerned, in the gold chart.
Well, I think you get excited maybe about the miners and their potential development. Matt, anything you want to add on gold analysis here?
Yeah, it's the miners that I do think has some excitement from a charting perspective. You're talking about the miners again, sitting at some weekly support levels. You're looking at an area of the market that, when you're staring at down the barrel at a Shiller P ratio that's 40, quickly approaching one of the most overvalued markets in the history of the modern markets, and you have valuation concerns across the board. You're sitting staring at some gold miner charts with gold, showing a little bit of recovery, and they have proper valuation sitting on major support levels. I think any bottom feeder is interested in GDX right now.
I think you got to be, definitely, absolutely. But
and the question I guess I have is, if you are, because all of us have been players in GDX for many years. So for the people that do play in GDX, they know it's not just direction, right? Greg, you said it best. You get the combination of delta and theta, right? And is there anything better than when you do get the combination of the guarantee of theta with the hypothetical probability of delta?
It's fantastic.
I mean, that's Goldilocks type position, quite frankly. And so when you're in that Goldilocks type position where you can get some type of value in an area of the market where you know you can get cash flow and you can sprinkle on like a little cherry on top, a little bit of directional analysis, that's that Goldilocks combination of delta and theta that Greg talks about. So I do think, yeah, with gold itself, the raw metal, yeah, it's volatile and it's back within the ranges of 1800 and 1840, and I don't think that's too exciting. But I do think it's a little bit exciting to look at the opportunity in the gold miners as they fight for that support level, because the opportunity for theta is there. There's no, I don't think you can debate that. I really don't. You get dividends and you get cash flow, and that cash flow comes from the liquidity of the options market in this space, which is very, very nice. So that's not really debatable. The debate is whether that support level is going to hold. Well, if that support level holds, that's where the directional opportunity comes in. If the support level breaks there, you got an easy trade management. You say it's a position trade. You got an easy trade management. Underneath 30, get out. Underneath 30, get out. Offset the loss with covered calls or cash flow principles. If you do want to look at it from an investor perspective, and it does break 30, you just keep writing covered calls. And so I think the opportunity is there from a theta perspective, from a delta perspective, but I also think it's there from a management perspective as well.
And those are really the values and the things that excite me about a gold miner position. I already have shares in GDX that I've held for years and years and years. I'm looking to pick up more, by the way.
And one last point, it is not hard in this market to find a quality breakout. It is not hard. It is very easy, actually. In fact, the most difficult nature of the scouting report meeting these days is not finding potential trades. It's discounting the ones that don't meet a certain standard. Well, here's an area of the market setting on major support with proper valuation.
Yeah, I know.
I think it's interesting.
Yeah, I do as well. And I think those proper valuations are an important part of the highlight. I think net PE ratio around the gold miners, you told me the other day, is around 13, 14, something 14. Like that. Yeah, pretty attractive. All right, I like it. All right, last one here then. Let's take a peek at Bitcoin. Then we'll get into stock talk. I got a couple of stocks we want to round up. And then Coach Greg has another round of buy one, hold one, dump one. And
talking about a breakout here.
Yeah, let's talk about it. Here we are, guys.
This breakout.
We're pushing towards it, Tyler.
Let's talk about this.
Tyler?
You guys all thought the market was going to tank as soon as Holmesy got involved.
That's not what we
all wrong. That's what you said. Go back and listen to the tape.
Thought.
Listen to the tape.
He's been waiting all week. Didn't mention it once.
Not what was said.
That's 100% what was said. Everybody on YouTube, they're going to be writing in right now saying, "Oh, we remember when you guys said that."
I think we made one joke about Greg buying the top. I think that we made one sarcastic joke at that. That's it. We all love this chart.
Greg, I'm long, and I added more different cryptos this week to go more long. So
did I, buddy.
Don't you ruin the narrative.
Just full disclosure, so did I. So if the market tanks, it's my fault.
Ty, do we got a breakout here? I don't think we got one yet.
Not yet.
No. What do we need?
Well,
I mean, look, definitively, you did. Let's look intraday. I mean, it depends on the time frame. The major breakout you want didn't happen yet, but I gotta go further back. Hang on.
Yeah, the double bottom held, and then you violated both vertical and horizontal.
Yeah, you're right. I mean, you've broken above some intraday resistance levels, but the big boy level, 50,000, right? Because they're anchoring on the round number of 50K, but we've hit 50,585 a couple of times now. So that's kind of establishing itself as the level that would kind of definitively signal that we're breaking. But you got to be pleased by today's movement, right? You like it better today than you did the last week. So it's getting there, but you want to see something like Ether or Ethereum did this week, right? It's like, give me some conviction, boys. Give me some conviction like yesterday's bar.
And again, a lot of people missed Ethereum. More people track Bitcoin, but that's kind of the breakout potential that Bitcoin has, right? That you saw. And even though you're still looking at a very similar technical pattern, yesterday and the day before, you're looking at Bitcoin saying, you better hold. You better hold.
Yep.
Now you kind of got your leaning back and you're like, okay, how good can this get? You have that subtle shift, right? You have that subtle shift. So I do think I do think Bitcoin has an opportunity here to do something similar to what Ethereum did on the breakout. And Tyler, I think the point is very, very keen here. The market has now told us exactly where they're looking at above that 50K, because 50K is a significant whole number, but it's a zone around 50K, right?
Yeah.
And Bitcoin's ATR, what is Bitcoin's ATR as of right now?
Oh
This very
goodness,
like,
that's a great question. Let me look that up. Hold
even
on.
even in short-term consolidation, guys, we're still talking about an ATR of 2,400.
$2,400 a
And
day.
so
Yep.
and so that zone is fairly significant, and you don't know exactly how big that zone is. But now, after a week of doing this on Bitcoin's consolidation, you kind of know exactly where the top of that zone is, and that's right where you identified. So I do think you have had some important data here today come in.
Yeah. Yeah, it's an exciting chart. I think anybody who's watching this is anticipating a potential breakout here. You guys identified the exact data points we need to be paying attention to. Here's a reminder: 24-hour a day, 7-day a week market. It does not close over the weekend. This is the kind of product that you, if you're trading it, you got to learn how to track it. Yeah.
Bitcoin doesn't care about Labor Day.
It does not care about Labor Day. In fact, many big moves in crypto in my lifetime have been around 3-day holidays, and that's not a joke. That is
It's
absolutely
absolutely
real.
accurate.
So absolutely. So pay attention to Bitcoin over the weekend as well. All right, guys, that's the market skyline. Let's get into stock talk now, and just a couple of items, I believe, Matt. There's a few stocks in the earnings roundup.
There isn't much. There isn't much, but did have a couple negative reactions to some earnings reports here today that just want to do a quick rapid fire on. Healthcare info service provider VEEV. They come in at 94 cents versus the expectation of 86. Revenue came in at 455 versus 452. They also had guidance affirmed and yet gapped down. 3 companies in this space reported, not an investor in this space in terms of health info services, but this looks like a space problem at this point, with multiple companies today gapping down on earnings that either beat or came in line. So a little bit of concerning data coming in when you get a negative response in a healthcare space, and you're already having a little conversation in healthcare in general to wonder whether or not this current run has kind of, leveled out a little bit. You are seeing a little bit of earnings getting beat up in the healthcare space today on beats or coming in line, and that's typically a little concerning for me after a market is price appreciated as much as healthcare has. So keep an eye on that. Outside of that, Chewy's, CHWY, Chewy's comes in on a miss and a miss, and really simple, guys. In an earnings season, and again, we're kind of well past earnings season here, but in the previous earnings season where high 87, 88% of companies are beating EPS and revenue numbers, Tim, what do we say about companies? You got to beat.
You got
right? At a minimum, you got to beat. Man, we'll geek out the percentage if you beat, but you got to start with the beat. And Chewy's just didn't do it here today. Came in at a negative 4 cents versus expectation of a negative 2 cents. Revenue came in line at 2.2 versus 2.2. But not only did they not beat EPS numbers, they also slightly lowered their quarterly guidance. We've seen this a lot with Delta coming through. A lot of companies, including Hormel, which we'll talk about here in just a moment, lowered quarterly guidance while maintaining yearly guidance. This is something that we have seen over the course of the last couple weeks in earnings. Concern about Delta in the quarter has not creeped into concern about Delta in the year yet. A lot of anticipation that this is yet another dark cloud from a pandemic perspective, but yet a lot of hope and belief that we will overcome this one, very similar to what these other dark clouds that we've had overcome. And we're seeing that a little bit in guidance from a quarterly versus a yearly perspective. But again, with Chewy's is very simple here. You got to start with the beat. You didn't, you missed, and then you lowered guidance. That's an obvious sell and a stay away in the short term. Hormel is the last one I want to talk about very quickly. HRL, please. Hormel comes in with 39 cents versus the expectation of 38 cents. Revenue came in at 2.9 billion versus the 2.7 expectation. Once again, slight beat here, but same storyline that I've seen today, yesterday, last week, and the week before. From a guidance perspective, I haven't seen a lot of companies lower 2022 guidance. It's been very few companies that I have reported on that have lowered 2022 guidance. I've talked a lot about companies lowering next quarter's guidance while maintaining year-end guidance. And we saw a little bit of that with Hormel here as well. They basically maintained maintained yearly guidance, but they slightly lowered, and I mean slightly lowered. But again, this is kind of a theme that's developed in recent earnings reports. They slightly lowered short-term guidance, maintained longer-term guidance. Market didn't like it. That's a sell. And Hormel was a stay away before from a bull side. It's a complete stay away still.
Mm-hmm. Those gap downs. I mean, here's the thing. We've seen this throughout the earnings season. I'm glad you highlighted on Chewy as well. But if you beat, but you don't offer good guidance moving forward, you're generally getting punished on these stock price responses.
It's been too good of an earnings season to not at least be average.
Yeah, you have to at least come in those lines. All right, appreciate the quick roundup. I only got one story I want to talk about outside of that on Stock Talk. Then we're going to play our buy one, hold one, dump one. We always do on Thursday. And I think Coach Greg's got 3 stocks from the beer industry to highlight during that fundamental segment. Apple Computer here, Spotify, Netflix. You can take a look at all 3 of them. Apple, I'm still trying to figure out how big of a deal this news story is. They did kind of go a little bit more lenient on their in-store app purchases, Matt. They made an announcement that Spotify specifically and Netflix is going to be able to link to their websites. They had not done that in the past. So people can sign up for Spotify and Netflix without using the in-store purchases through Apple. What's your take on this story?
I honestly think this, remember when we reported on the South Korean law that forced Apple and Google to basically allow developers to use non-Apple and Google payment systems? And that story is just a South Korean story from a legal perspective at this point, but what it represents to other countries around the world is kind of what where the conversation with these massive tech companies has been in the last 5 years. We've seen discussions just in the last year on the Hill regarding this exact same conversation, and the conversation is on the ability for companies like Apple and Google, Facebook and whatnot, and them to have a monopoly where they force other developers to basically, play by their rules and not generally accepted industry standards. And so, when South Korea did what it did the other day, it was just kind of an indication of where the governments around the world is going to start looking at regulating some of this. I think this is Apple just saying, we know where the headwind is, and we're going to try to dissipate the headwind as much as we can. I
think they're trying to get in front of it. Exactly. Yeah. I mean, these new rules aren't going to go into place until 2022, by the way.
And Apple will try to just inch by inch. We will give up 1 inch, but not 2.
Well, think about even some of the detail in the announcement today. They said media companies, not gaming companies, because so much of their in-app store, exactly. They specifically said not gaming companies because in-game purchases they want to keep in their platform. There's a lot of revenue there with those, Matt.
Yeah, and Apple, and again, Apple, there's a lot of revenue to share in that as well, is what I would suggest to Apple and Google. But again, if you're running Apple or Google, this is what you do. You see the headwinds coming, you offer tokens that don't really impact your revenue streams that much, and you hope that's enough to alleviate the crowd mentality a little bit. Yeah. I think it's a start, but again, I'm not too concerned about Apple or Facebook or Microsoft or Google on this type of news.
The biggest beneficiary might be Spotify here today, and it's been a company that I've taken off my radar quite often.
Spotify is going to need a beneficiary of a few other things.
It needs a lot of things going in its favor. There's no doubt. I've got a big long take. We're not going to share it today on Spotify. I've got some negative things to say about the company's
I've lost faith in leadership at Spotify.
Me too. I don't agree with what they've been doing the last year and a half. So.
I don't agree with the business model they're pursuing.
Yeah, me too. All right, let's get into our last segment here. That's all I got from a news perspective. Anybody got anything else on stocks? You go ahead and shut it out there right now. Nope. Let's go into last segment. Buy one, hold one, and dump one here. Every Thursday, we invite Coach Greg Old Money Holmes onto the show. He is the, writer of the Rookie blog. He's a coach over at Tackle Trading. He's a veteran trader. Used to be a financial advisor. People don't remember that. If you've ever listened to his interviews on the podcast, you'd know that. Friend of the show, friend of our community, and a big, big believer in fundamental analysis. Greg, that's why you got the moniker Old Money Holmes as well. You focus on dividends and growth, or fundamental growth and all those type of things. What have you got for us today in buy one, hold one, and dump one?
Well, I got a bit of a weekly routine. I usually kind of look for sectors that are doing well. And the one I found today was Staples XLP. Looks like it's getting ready for a breakout. So I thought that was nice and strong coming into there. So I started looking in the sector. And since we have the Labor Day weekend, the 3-day weekend coming up, I thought what better way to celebrate that than by looking at 3 beer companies. So today we're going to look at TAP, which is Molson Coors. We're going to look at Bud, and we're also going to look at Constellation Brands, which is, as you and I talked pre-production, it's Modelo and Corona, things like that. So we're just going to compare these 3. They got some interesting numbers, interesting things to look over here. Obviously, 2 of them are somewhat in the same price neighborhood. TAP and Bud are not that far away from a price perspective. Constellation Brands is quite a bit more expensive from just a price point. But like I said, kind of in the same business. So numbers wise, I'll just run through them. I think you got TAP up there now. Do you? You should do. Perfect. So TAP, from a chart perspective, obviously in a pullback here, we're looking for some kind of reversal pattern here. We don't have it yet. Trying to hold support, kind of taking it on the chin from a recent high there. So, maybe technically speaking, it might not be the right time for Coors, but it is something that could go on the radar for sure. As a matter of fact, Molson Coors looking pretty ugly, but it actually looks even better from that weekly perspective there, from a turnaround perspective. So anywho, numbers wise, they run down like this. 2.8% dividend yield, so almost 3% there. 0 years of consecutive dividend increases. Started dividends in 1970. Payout ratio is a paltry 18%. Which is good, means they can sustain that dividend. Their PE ratios are a little bit on the high side here at 34. They got sales growth 6.2% this year and 2.6 expected next year. Assets and liabilities, they're all pretty much in line here. You'll see that Bud's got much more, but they're 27 and 14, which what you're looking for there is just the spread, right? You want the spread. You want to know at the end of the day, if they had to close up shop, would they still be okay? And from that perspective, that if you've got a decent spread there, we got a spread of 13 billion there. That's good enough for me. Free cash flow, they're 943 million. So not quite $1 billion, but still that's a fair bit of capital there for a company of that size. 0 years of net income increases. Their net income seems to be a little bit up and down, and that's maybe just part of the business. They do have weekly options, which is good, something we look for. Their covered call, approximately 30 days at the money, is around 2.2%. So not a bad little deal there. Institutions own over 91% of this, and it's been negative 0.62 ownership change, institutional ownership change in recent vintage. So just some numbers that I think are important there. The dividend yield's nice and high. The covered call is you can start to take a little bit of capital out of that as well. So perhaps one of the better cash flowing stocks here. But again, you got to look at the chart as well. You always got to take into consideration the technicals. So Bud's next up on the docket. So Bud, very similar. Now the problem with Bud is it's a foreign-owned company in ADR, so you get to see this kind of gappy stuff here with it. It just is what it is. It's kind of more all over the board, I think, than the other ones. But again, kind of getting beat down here. We're looking for a reversal pattern. If we kind of connect the dots from the high down to where we are now, you want to make sure that if you're doing a trade on this, you need to make sure that this breaks that downtrend, and it's working towards that, but it's not done it yet as far as I'm concerned. So might not be ready for prime time, but something to put on that watch list. So numbers wise, these guys, now I will throw out a caveat here. I have a payout ratio for these guys. I looked high and low. I think because maybe they're an ADR that my numbers aren't correct, so I will preface that now. Anyway, dividend yield about 1.88%. 0 years of consecutive dividend increases. They started paying dividends in 1932, so we got a pretty long history of it. Now the payout ratio, the only number I could find was 574%. I don't know that that's accurate. I looked in about 4 different places to find an actual payout ratio for these guys. I was unsuccessful in finding that. So again, could be because it's a foreign-owned company. Their PE ratio is 22, which is considerably less than TAP. Sales 14% this year, 5.5% next year. They had a huge gap here in assets versus liabilities, 226 billion versus 148. So a very, very large asset base versus the liabilities that they hold. Their free cash flow was 9.3 billion, so very healthy. 1 year of consecutive dividend net income increases. Sorry. Also weekly options. Their ROI was very close at 2.1 for approximately 30 days at the money. Now, the thing that I found very interesting was institutional ownership was only 4.5%. So very interesting in comparison to the other two, as you'll see. Institutional ownership change, 1.87% increase in recent vintage. So the next up on the docket is Constellation Brands. Again, this is going to be the most expensive one. It's also the best chart as far as I'm concerned. Again, it's still working for a reversal as well, but it seems seems healthier from a technical perspective, I think, more so than the other ones. So again, higher dollar stock, but their numbers they've got some decent numbers here. So 1.5% dividend yield, 5 years of consecutive dividend increases. They only started paying dividends in 2015. Their payout ratio is 47%, so not bad there. PE ratio came in exactly the same as TAP at 34. Now, their current sales growth, negative 50% for this year, positive 7.1%. That 50%, I think I might have a number wrong there. I might have been 5%. So I think that's negative 5% for this year and positive 7.1 for next year. Their numbers looked almost exactly like TAP, 27 and 13. So very, very close from assets liabilities. Again, the spread there is decent. It's almost 14 billion. So that's good enough. Sitting on about 2 billion in free cash flow, 1 year of net income increases, weekly options as well. And again, cover call 1.9% for approximately 30 days there for Constellation. Institutional ownership was over 80%. And in the last little while, they've lost 1.85% of institutional ownership, meaning they've sold off some. So if you see a big change in institutional ownership, then it's something to look into. These small numbers here are not a big deal. That could just be some profit sharing taking from some of the institutions as well. So, but if you start to see a mass exodus of these, that's something that can concern you fundamentally as well. So that's our 3: buy one, dump one, hold one, gentlemen.
All right, this one's going to be an interesting one for me. I'm looking at all 3. Appreciate you breaking down the numbers and showing us the 3 different companies. And now the game is all 3 coaches here, Tyler, Matt, and myself. We have to decide which one we are going to buy, which one we're going to hold, and which one we are going to dump. Let's bring Tyler in first. And Tyler, you usually kind of reinterpret the data, kind of explain it to us. What do we got here with these 3 companies? What stands out?
Oh my gosh, this one is not easy.
It's not. This is not an easy one. No.
Okay, so here's your lineup of all the data that Greg just gave. This is good because it gives you a side-by-side comparison. I think this is going to come down to what do you value most? Price perspective. I'll highlight just the highlight for each column here. Cheapest is TAP. Constellation Brands, as he said, was quite expensive. Dividend yield, highest is TAP. Lowest is Constellation. Dividend increases. These guys cut it last year in the pandemic. Constellation Brands apparently it did not. Bud's your oldest company. Constellation Brands, the newest company. Well, is that true? I mean, I would assume so since they've been paying the dividends the longest. That's a fair takeaway, right, Greg?
I'm sure Constellation is a newer company.
It's
Bud, TAP, Constellation.
Mm-hmm.
Yeah. All right. So payout ratio, not sure on the Bud, but TAP. See, this is pretty good. They have the highest dividend yield and the lowest payout ratio, which means It's not like they got that higher dividend yield by forking out, 90% of their earnings. So that impresses me. PE ratio, lowest for Bud, TAP, and Constellation are about the same. Sales growth this year, Bud is the best. Jack that. There we go. Bud's the best in terms of this year's sales growth. Kind of all about the same next year. Assets versus liabilities all look pretty similar to me, right?
Yeah.
Not much to write home about there. TAP's got the best free cash flow. I think that's what we said.
Oh, that's the lowest.
That's million.
It's
Sorry,
the
Yeah.
it's Bud, 9.3 billion, right?
Yeah.
Everything else is kind of sixes, right? The ROI on covered calls, that to me is sixes. Weekly options available on each. I don't really have any commentary on this because I don't follow this metric. So, anyways, there's your roundup.
All right.
I don't know who you want to go first, Tim.
I can go first, or Matt. Matt, you want to go first? Or want me to go first?
I typically go first, right?
Yeah, you usually
On this
do.
segment.
I just got to take.
So I'm the one that has to go first. Okay.
You don't have to.
I'll go first. Very similar metrics in some of this makes it difficult. There's no doubt about that. I do like TAP's dividend yield, but you got enough free cash flow. Why don't you go ahead and increase that? So I'm going to go ahead and hold TAP, sell Bud. Outside, I see metrics fairly similar in most of Bud and TAP. Constellation's a buy for me. I like the story of this company right now. If you're looking at adding something, Bud, TAP, both dogs in this space. There's no doubt about that. Constellation Brands was a growth component of this industry and sector for many years, and that's why people bought it, is for the growth potential. Over the last few years, they've tried to change that. They've tried to change that a little bit, offering dividends, doing stuff that investors appreciate. And Constellation was in that weird moment of growth and cash flow there for a couple of years, was actually a Tackle 25 component there. So I like the story there. So I got a hold on TAP, dump Bud, pay out more dividend Bud, and then got a buy on Constellation based on these three. That's how I'd rank them.
Yeah, actually, I'm exactly in line with Matt. I think we have the exact same thoughts on it. Constellation is the growth company here. If you go back to the spreadsheet data, there's a couple of numbers that I just want to highlight here.
And they're just starting their cash flow side of it.
Correct. Number one, that sales contraction, that -5%, I discount that completely. That means nothing to me at all. As a matter of fact, the sales numbers are the reason why Constellation is the most exciting. If you look at their yearly actual sales, they've been increasing year over year for about 7 years. Bud and TAP have been losing annual revenue year over year. In fact, Budweiser did 56 billion in 2017. They only did 52 billion in 2019. It's been going down. It's not on the wrong side of that trend. They're a much bigger company. Constellation's got growth components to it. If you go to the chart as well, there's a couple things about it. Number one, STZ, yes, all beer companies have come down. If you looked at all three of them, bang, 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 you're going to see downtrends over the last several months. Constellation still above long-term channels, still above the weekly 200. It's at a major support zone, $212. It's a buy. Whether you buy equity or if you want to play leaps, by the way, it's on the poor boy covered call list at Tackle Trading on our list for a reason. It's a fundamentally sound company, has growth components, got good options. Bud is just the dump here. And I know there's some reversal characteristics on the daily chart, kind of trying to find some bottoming patterns and some support. Just the gappy nature of this company being an ADR now. They're now no longer just a US company, guys. They actually listed over there in Europe. And I don't like the fundamentals behind it. They got to pay a better dividend yield. They've got to get better cash flow. If I have to hold one of those two, it's TAP. I get rid of Bud and I buy Constellations. Yep, I'm with Matt.
Now, how the heck am I supposed to argue against that? Look, if you care at all about the charts, why? There's no way you can pick Bud and TAP over STZ, right? Yeah. Even if you didn't know the fundamental story that you guys just laid out, the market is revealing that to you, right? The price action of STZ, Bud looks like an inverse ETF of STZ. So does TAP. So it's like, look, if you cared all about price action and you're rewarding strength, you have to go with Constellation Brands. There's no choice. So I concur. I don't know why. I mean, this chart looks great to me. So I would buy STZ, and then to your point, how do you decide which one to dump? From a charting perspective, there's not much different. They're both duds. Bud's a tough one to trade. To Tim's point, the gaps make it challenging. So if I had to use one of the two, yeah, I would use TAP as well. I'm actually interested to see if Greg can argue to the contrary here, because I don't see much that we can. I
agree,
can't
Greg.
deviate from what you guys just said.
So we've got a consensus, Greg. Are you? Did we get what you think is right, or do we?
I
have
heard
a-
Tyler. Yeah, go ahead, Greg.
You guys missed the bar on everything. Like, I mean, the whole thing. Here you guys talking fundamentals, smundamentals, technical schmecknicals. Who cares? It's all about taste. Coors sucks. Bud sucks. I'll take a Modelo or a Corona any day of the week. Like, it's just easy here, guys. It's easy. No, I'm kidding, of course. But no, you guys actually got the way I did, but just for some of the similar reasons, but just a few different ones as well. Budweiser, yeah, I love the fact that Matt pointed out, yeah, where's your dividend yield? Come on. You know what I mean? Like like I said, this payout ratio, I think that number is just messed up because they're an ADR. You got $9 billion that you're sitting on. Come on, reward your shareholders. Let's get this here. The other part that I don't like about Bud that Tyler kind of dismissed there is institutional ownership. That is a big deal to me, right? Institutions are usually owning these things because they're fundamentally strong. Now, I'm not putting all my faith in a metric like that, but it is something that kind of backs up what I believe. And the fact that it's only owned by 4.5% of the institutions, that kind of bothers me a little bit. So that's one thing that makes me want to sell. But TAP, okay, whether I like the company or not, from a technical perspective, I do think that they're kind of starting to make a little bit of a turn there. It's not great, mind you, but on the weekly, they are starting to make a turn a little bit. So you can look at it and say, okay, maybe I'm getting this at a decent price. Even if you're not getting it at a great price, when you start to look at their numbers, I'll take a 3% dividend yield where I can turn around and get, even if I go to a lower delta where I go and get 1.5%, every 30 days on a covered call, that's right in my wheelhouse, right? That's 12 to 15% a year. I'm completely fine with that. So that makes me want to buy TAP for that reason. So Bud's the dump, TAP's the hold. And the buy is obviously Constellation. Like I said, number one for taste. They have better beer as far as I'm concerned. They have a better chart technically, and their fundamentals are good. The only caveat I would ever have is that their stock price is very high. So, if you're investing in this, it's going to be a bit of a commitment from a capital standpoint.
I think I heard, Greg. Oh, go ahead, Greg.
I like the 5 years of consecutive dividend increases. They didn't dump their dividend when things got bad, which was okay. And you know what? You're still getting around 2% on a covered call. You're still getting a 1.5% dividend. You can still make that work as a cash flow play, and you still have a growth component to it as well. So.
I think the one thing I realized out of this entire conversation is the world appreciates liquor more than beer.
I could have brought Diageo into the fold here. We could have talked about Guinness.
That's Constellation. Constellation has a lot of liquor brands to it.
Yeah, tequila, a bunch of different stuff. Yeah, absolutely. And I also just heard Greg doesn't like American beer. He found a way to trash American beer.
He found a way to trash American beer. Tyler,
That's exactly right.
Hey, it's not hard.
Any way to trash the Americans there.
I live in Canada. Like, we just have better beer. We don't got much. We don't got much that's better, but we got better beer.
We'll give you the one.
I won't
just concede one.
Just the one.
We have better hockey teams too.
That's an argument for another time. But I'm not giving him the point.
Just the one.
All right, I'll get better, dude. Just better. Canada's just better. You guys are awesome. Up north, we love
better
you.
at beer.
Absolutely.
We gave him the one.
All right, we'll give it to him. All right, fine. I don't want to give him the point, but we'll give it to him. Greg, I like this exercise. Constellation, obviously one I want people to put on the radar. The other two probably. I wish we could just dump the other two, by the way. It could have went that way. But let's start wrapping up our show. Back on the S&P 500, let's get some final thoughts. Tomorrow's going to be an interesting day in the market. We'll see if it's a big day or not based on price response. Tyler, you first. Final thoughts for the team out there.
Listen, I'm just glad Greg agreed with us on that, because I would have been impressed if he could have argued against those picks. No, look, I love the market. I like how things are going. I don't know if you want to bring up the newsletter that just dropped on Trading Justice. That would be my thought.
Yeah, great, man. Learning from the lumber bubble. Tyler actually just published this morning. It's the monthly newsletter over at tradingjustice.com. We do a weekly podcast through Trading Justice, and every month we provide a newsletter, different topics, different ideas. This time, Tyler examined the lumber bubble, which was extraordinary in the last 18 months, by the way, watching lumber prices go up to like $1,600, then all the way back down. Tyler, talk a little bit about it. Why should somebody read this? What are they going to get out of it?
Well, I'll give you the here you go. What happened to lumber provides an insightful case study on how markets work, pricing dynamics, and ultimately why investing in equities is the best way to grow your wealth. So there's going to be economic lessons. You're going to understand supply and demand. I basically broke down like retrospective, what happened, why did it happen, and what can you learn as an investor. So I think there's some timeless takeaways to this particular drama that played out, and it was fun putting it together. So I think it'll be a nice, easy read for people.
Definitely looking forward to that. I haven't read it yet myself. I'm going to actually sit down and do that over lunch potentially here. Looks like a good read. Looks like a good article and timely. And one of those topics that whether you're an investor or not, you heard about lumber going up. It made housing prices go up more than we've seen in a long time in the last 18 months. Maddie, final thoughts for the team out there.
Well, I am not going to potentially read that, Tyler. I am absolutely going to read that over lunch. So there's that. And later on tonight, we do have the Cash Flow Club coming out later on tonight. I believe Coach Gino is on the Cash Flow Club for the pro members. And then tomorrow, come back with us on the YouTube channel where we break down all the market activity tomorrow, including the last most important and latest most important data point in the labor market numbers as we march on towards tapering announcement coming into later this month. So be with us tomorrow as we break down that news.
Yeah, absolutely. Friday, same time, same station. Make sure you come back and join us. And Greg, it was great to have you today. Any final thoughts you got for the team?
Yeah, I got to do a bit of grandstanding here. Last night on Trade Masters, I brought 3 bear picks, and it kind of confused and amused Emily and Mark. And I'd like to just throw Visa into the mix there. I made a point yesterday that even though the markets are going up, everything's floating upwards, there are still bearish picks to be found in the market. And 100%. So I had a setup here on Visa. It was a classic textbook head and shoulders, breaking the neckline. Show enough, I figured it would be a quick trip right down to that 200 MA, which Tyler has on there. And that's exactly what happened. I pointed out a couple other very similar charts to this as well. So my thoughts to the community are, you know what, go with the trend, but there's always, in every bull market, there's bearish picks. In every bear market, there's bullish picks. So just find good technicals, find good setups, and enter them correctly, and you'll be good to go.
Yeah, glad you did highlight that. Did you win last night, Greg?
I did, but I didn't win on picks, oddly enough. It was a draw, which is the first time we've ever had a draw on Trade Masters. And so I threw in a 4th joke there, and that was what put me over the edge.
The joke put you over the top. It was the tiebreaker. So you had a tie on picks, and the joke got you through. Interesting.
How did we have a tie?
Uh-oh, I just got Mark in trouble.
Yeah, you did.
That's all right. That's all right, Matt. We worked it out. So
all right.
I think he just threw me a bone because he's like, Emily, you're busy. You can take it, Holmesy.
I think the host doesn't want to host.
Oh, goodness. Oh, Ty, I want to hear the joke now,
I'm
Greg.
Judging you guys.
What was the joke, man?
All right, bank robber takes all the money and is about to leave, but before he leaves, he asks the man lying on the ground. He says, "Have I robbed this bank?" The man responds, "Yes, sir," and promptly he gets shot. The robber questions another man and says, "Have I robbed this bank?" The man replies, no, but my wife here saw everything.
Tiebreaker it is. All right, guys, that's it for today's show. A little dark there, Greg. A little dark. That's all right. I mean, that's where humor always is. You got to skirt the line a little bit. I get
That's
it.
right. That's
All right, guys, that's it for Thursday's show. We'll be back tomorrow, same time, same station. We'll be breaking down those jobs numbers, important day. And then we're in front of a 3-day weekend. So make sure you join us. Click that subscribe button, click the bell. That way you'll get an alert when we do go live. We're out for today. We'll see you then.